Yeah, ladies and gentlemen, good afternoon, good morning. I believe we are live. If you can hear me, please do let me know. I haven't done one of these in a long time. So I just want to make sure my sound is A-OK. If my sound is A-OK, and then I'll just keep it moving. It's been a while since I did a live stream for you guys. So yeah, let's see how it goes. If you just check in the thumbnail or in the description, there are specific assets I'd like to look at. Can you hear me? Right. There's specific assets that I want to look at today. All right. And they're actually tied to the day trading series I've been doing for a while. I was supposed to analyze these for you guys last week, Saturday, or Sunday rather. But we had our annual fundraiser event the day before Saturday, and I was dead tired the following Sunday, Monday, Tuesday, Wednesday, to be honest with you. So I never got around to doing that. So I'm going to be doing that today. All right. So we're going to look at off the top immediately, euro. Let me just put out on the whiteboard for you, so that you can actually follow, with me here. And once again, if you can hear me, my audio is clear, please let me know before we start. I would absolutely appreciate that. Right. So this is war room number 83. I'm assuming war room number 83, and I'm assuming everyone can hear me. So I'm just gonna, start to power through. Right. So war room number 83, very close to 100 war rooms. Right. So I've switched over to my whiteboard. Right. So I want to look at EURJPY today. EURJPY. And off the bat, I must just tell you right now, it's most positive market correlation pair that I like to trade when I'm looking at EURJPY, Swiss franc JPY. So that's going to be EURJPY, Swiss franc JPY. Then we're going to look at pound JPY, and the positive correlation pair to that, and that's NZDJPY. Once again, if you don't know why I'm doing this, I'll explain it, but I'm just picking up where we left off the last time we were together. We'll look at AUDJPY. This is like the crux of today's war room, right? I'm going to look at indices, I'm going to look at crypto, I'm going to talk around gold, I'm going to talk about market sentiment and all that kind of stuff, but this is kind of like the main assets that I would like to base some of my signals from, or rather to catch up with, to see where the markets are, and to see where we can make some money this week. Remember, if you're following the scenario analysis series, there are about seven videos now up around that kind of stuff. And you're really looking at anywhere between 100 to 180 pips per day, right? If you follow what I'm kind of like doing, depending on your account size and how you leverage your account size with proper risk management, that's good, consistent money, right? So please don't fall asleep on this kind of like very, classic opportunity here. All right, so Euro, Pound, and USDJPY have positive correlations, and the asset that is the most negative correlation with them is pound Swiss franc. All right, so what I'm saying here is when Euro Pound is going up, generally speaking, USDJPY will also be going up. And what I'm looking to sell when that is happening is pound Swiss franc. Thanks a lot, brother Alvin. Thanks a lot, David. Thanks a lot, you guys. Thank you for everyone who's responded. I appreciate that. Where are we? And then we're going to look at gold. And something weird happening about gold, at least at an institutional level. They are starting to buy in massive amounts. I'm not saying it's time for us to buy gold, but I'm just saying just be very prepared for a swing move. And I think that'll be a pivot when the dollar falls, or when the dollar is done, right? Gold will be the go-to, right? So either they press it down a little, we shall discuss this. Right, I've just typed there gold and silver. Obviously, gold, XAUUSD has a positive correlation with silver, up to about 93%, right? So when gold and silver is going up, I would rather sell USDZAR. Granted, remember, you don't just sell because something is going up. For example, USDZAR is not something you want to be selling right now because of how strong the dollar is, right? But I'm just giving you the negative correlations together. These are your notes for day trading, but we're also going to be looking at the overall swings. And we're going to look at palladium, right, which is XPTUSD, right, 87% correlation with silver. And, the negative correlation of palladium really is, anything like Euro Pound is a negative correlation, USDJPY, USDZAR. So we can put in USDJPY here. All right, so those are kind of like main assets I want to talk about today. in the war room, or at some point in time when I now focus to giving you guys some swing trade signals. There are also the assets I am now closing this day trader series with. If you recall, the last time war room number 82, I gave you the first first 9 assets: Euro USD, Pound USD, USD CAD, Pound USD, Pound CAD, USDJPY, AUDJPY, blah blah blah. Right. So this is the final group of assets that I like to day trade, and I'm giving you the reasons why I like to day trade them and the how. All right. So we're gonna look at the stuff. Right. But remember, every day, in every way, I am getting better. I am getting, better and better as a trader, right? You need to reaffirm yourself all the time. It's absolutely crucial. Those of you who've been tracking my end of year amount, if I was to hold NASDAQ for one more week, my end of year amount, the amount I've been affirming to get from the markets by December, if I hold my sales on the NASDAQ, if Bitcoin is to give me about a 3 to 4% drop, S&P 500, USD, if all those assets do not retrace this week and drop for one more week, I'm pretty sure I will reach my annual amount with these war rooms. All right, and it's only mid-October. So by the end of this week, will have been 3 weeks into October, and the goal that I set for myself for this public account that I've been doing with you, 83 war rooms in right now, I would have made it. Now, it's weird, like for us to do an honest survey and people were to be very, very honest with me and actually let me into their lives and into their homes and tell me where they are with their accounts, you would realize that there is a crazy difference, a ridiculous difference between the instructions I'm giving on buy to sell, how long I am holding my trades versus how long other people are holding their trades, where people are entering, despite the fact that we have agreed many times, we are going to set and forget, right, when it comes to swing trading, right? And the additional weekly money I've been giving you guys, when it really came down to, day trading, there is a vast difference. And so before we start today's war room, I really absolutely want to make, one small announcement and to start with this and just to kind of like put this issue aside for forever. All right. So what I've done, and we really have to really think through this. We were supposed to start our live classes, so to speak, on the 4th of October. But like I said, with the fundraiser event and how burnt out I was, that was completely impossible. Only 6 people got back to me and said live classes happening on the 4th of October was a bit short notice for them. And they were asking me to rethink the dates, right? And unfortunately or fortunately, it happened that way. I cannot change the dates I'm about to announce. I really want to make that very clear. I absolutely cannot change the dates that I'm about to announce. And so please write this down and I'm giving everyone as much time as possible. The first Tuesday of November is the 1st of November. The first Tuesday of November is the 1st of November. I will, with one person, 2 people, or whoever joins us, embark on trading psychology. It'll be 4 weeks of trading psychology. I have done my uttermost best to research this thing and to find out who are the best people teaching it. And I am not blowing my own horn when I say I am still to see a well put together program like the one that I have for you on the 1st of November. The whole month of November will be on trading psychology. Classes will be 3 times a week, Tuesday, Wednesday, Thursday, from the 1st of November on trading psychology. If you are still struggling on your trading, then there are many things that we absolutely need to talk about on trading psychology. So I'd advise you to please register for that. If you are a registered 365 student, you joined me a year ago, 6 months ago, you joined me yesterday, please note you simply need to attend the classes. The classes for you guys, I would want to use the word compulsory. They will change your game. All right. The classes will change your game. But if you're already registered, if you're already joined 365 at some point in time in your life, all you have to do is show up, right? The links will be posted in all the education groups. We'll send out an email and all that kind of stuff. There is no registration fee for registered students, right? I just want to make sure we're all on the same page. If you're not registered, have never registered with the Academy, I've made it as easy as possible. If you click down on the link down below, the very first link here says Trading Psychology course live classes, right? Click there and register yourself. You will not have to pay the full amount of the entire course. You're literally saying you just want to come learn about trading psychology. Trading psychology is an 80% game in your trading. It is the majority. It is the thing that allows you to understand your technical analysis the way you do, your trading strategy the way you do. Whether or not you're a supply and demand trader is a different question altogether. Whatever strategy you're working on, you need to come and master the process, right? So you just click on this link, specifically the first one. The second link is to register for the whole course. That's module 1, 2, 3, and 4. But I'm saying to you, if you just want to come for live classes, or you want a cheaper package, or you know what, however human beings think, please understand, I am starting my students with module 4 before I give them module 3. Because if people have module 1 and module 2, and they're not making the type of money that they're making, then the problem is not the technical analysis. The problem is the psychological perception of price. All right, so we're going to be dealing with a lot of things, right? The first thing I'm going to teach you guys is this idea of second level thinking, right? It's the thinking about the thinking. First level thinking is what we do on the channel: supply and demand, fundamental analysis, feds, looking at the charts. Second level of thinking is the anticipation of how other human beings interact with price and what your psychological state needs to be competitive. All right. Okay, cool. I see people like the live classes. Maybe we should go back to doing these things live, right? No problem. Right. In addition to that, I'm going to work on the trader state of mind. We're going to talk about, the rules to get in a winning state of mind. We're going to talk about emotional regulation. We're going to unpack a psychological concept called theory of mind, and then we're going to look at some very key formation biases. About 2 to 3 years ago, I started sponsoring master's and PhD research students, right? 10 at UCT, 6 at Rhodes University. Literally, their job was to get the sharpest fine print research around markets, because in Africa, believe it or not, there are no qualified trading psychology coaches with a psychology degree and incredible market knowledge. So 365 is creating that generation as we speak. My PhDs are graduating next year. My master students are done and they're already on the floor doing the research for us. So please, one more time, if you are not sure about trading psychology and you really want an in-depth look, this is a 4-week discussion throughout the whole month of November on trading psychology. I start with one person or no person. I know there'll be students who will be there anyways from 365 on the 1st of November at 6 p.m. Please make sure you are registered by then. All right, 365 students, you know the deal. You just need to show up. All right, cool. So that's a very important announcement that I do not want to forget to make. You just hit the link there and you register. Right, guys, a lot of amazing stuff is happening in the markets. From the last time I dropped a video, and I just want to run through a couple of things just to make sure we are all on the same page, right? It is absolutely crucial that, when thinking about, the landslide of the markets, and those of you who have been faithful, a month in, week in with me, you can't help but appreciate the accuracy of our analysis since January. Right. All we've done this year is hold sales, add more sales, and wait for sales. And the reason for that is the technical analysis of supply and demand, the fundamental perspective of the markets have been begging for deep recession. Now, I want you to know we are at this point in the market again, where the market is desperate for a win. We actually saw that last time. I'm going to pull up the NASDAQ in front of you just to show you what I mean. Then I'm going to kind of like give myself some more space on the screen there. There we go. I hope that's better for you guys, right? The NASDAQ has been multiply desperate for a win. And I think this is going to be another desperate week for the stock market, where price will want to rally and engage in these bear rallies. What are bear rallies? These relief rallies where price tries to break up to the upside, but eventually gets sold off. Now, I want to say something quite controversial. It's going to sound like me in January, but now we know that even though I say this in January, right, I now have the evidence to show you that I was right. Now, I want to say to you right now again, NASDAQ 100 is most likely never going to go back to all-time highs anytime soon. And when I say anytime soon, I mean by the end of this year, NASDAQ 100 will not have rallied to its all-time highs. By the end of next year, I don't think NASDAQ 100 would have rallied back to its all-time highs. What I'm saying is we are knee-deep in what is called the lost decade. All right, and I expect more pain to come. Now, I won't waste my time unpacking, headlines that you guys already know about. We know we had a terrible CPI report. We know that, inflation is faltering. We know that the Fed most likely will remain committed to increasing interest rates, and we actually understand the impact that will have on the stock market. All right. Now, despite all of that, I want to just quickly unpack for about 2 minutes, what some of us might have missed with the headline number, and then maybe kind of like explain to everyone, why it is that I feel this way, right? So I'm just going to pull up the PDF here. What is this? Okay, no, this is some research I was doing on some stuff. Right, there we go. So this is kind of like the inflation headline number, right? This is literally what everybody received last week when inflation came out. And I want you to understand this, right? Because you're going to start to see it again, right? When NASDAQ literally dropped 4 or 5%, and the very next day was bullish. I think it was on Thursday where it started to kind of like just buy out again. The same thing I just showed you, on the charts just a few seconds ago. This here, you see this? This was literally due to CPI, and then on Thursday there was a big sharp spike in a green candle, and of course you saw the chatter. A lot of retail traders thought it was time to buy. They thought markets were finding a bottom, relief rally, and so forth. And on Friday we had a beautiful dumping that gave us a critical bearish engulfing pattern. Right, for 365. You know why this is important, right? We like one of these when they show up. Okay, now with the CPI, I want this to kind of like make sense. This is what happened with the CPI. We missed the CPI on all accounts. It was a hot data report. Inflation is still high, right? So CPI rose 0.4% in September on a seasonal adjusted basis, right? So basically went from 0.1 in August to 0.4 in September. So it went up, right? The headline number, right, was supposed to be 8.1% annually. We actually got 8.2%, right? This also happened on Friday, right? So what are the things that are making inflation go up? If you go through my war rooms, you'll realize that there was once upon a time where I set you down with the August CPI report. And in the August CPI report, I pointed out to these incredible things that were the ones that were actually causing inflation to stay high. Where in August was the time where oil seemed to be falling, gas seemed to be falling, and a lot of traders thought, or not even traders, just economists in general, believed that we're going to get a drop in inflation, right? And one of the things that I brought up was this dangerous idea about rentals, shelter. Rentals and shelter in the CPI kept edging higher, right? When rentals edge higher, or when shelter is brought up in these reports, we pay attention as survivors of the 2008 housing market crash, because that is coming. If anyone is paying close attention to the hell, to the absolute hell that is going on in China, you will understand that if you thought COVID was bad, wait until you get this economic COVID, right? So shelter increases. So this report is based on increases in shelter. Shelter is still going up. Housing, food, medical care indexes were the largest of the many contributors for this particular report. So you can only imagine, right? Powell, wherever he is, when he read this report, probably kicked a big bucket. All I've done for you as quickly as possible is highlighted in green the difference price in inflation between August and September, right? Between the 2 months we're looking at, anything highlighted in green shows an increase. If it's not highlighted, it just means that the thing didn't increase, right? And by the way, if you're new, we're going to get to giving you guys signals, right? I know some of you just care for that. But those of you who are here for knowledge and understanding so you can control your own destiny, please bear with me for 5 more minutes, right? So food at home, food away, and energy, right? No, also, sorry, all items about food went up, literally went up, right? If you check right now, oil, Brent oil, crude oil, well, they're still slightly below $100 per barrel. So we had this slight disinflation there on energy, which still did not make an incredible impact on the CPI number. Remember, I'm bringing this up because Powell literally kept blaming oil and the war. So with oil being down for the last 2 months, inflation is still high. What that tells me is that inflation is no longer just an energy problem. Inflation is everywhere. Inflation is in the food. Inflation is in the shelter. It's in medical care, right? You cannot get around inflation. It is no longer a singular problem, all right, so to speak, right? And so these are the main issues, right? Services, less energy. So anything minus energy was shelter, which went up, transportation services, right, from 0.5% to 1.9%, medical care services from 0.8 to 1.0, right? So this is a bad report. This is an all-rounder bad report. And you can read the rest of it at your own time, right? But basically, things are bad overall, right? So it's not shocking that markets removed demands, right? It's absolutely not shocking that markets removed demands. What I did bring up, and I think I sent a video on the public Telegram group, please do check out when you've got time, is I've arranged my watch list in a much more organized manner, which I think will help you guys. For example, right now, if you have a look here, markets are completely closed because I'm doing this live on Sunday, right? So all I've done is I've literally added. So you just click here. I did it on my paid account and on the free trade view account. You can do it there. If you click on these 3 dots here, after you press watch list, you can add sections. If you press add section, where is it? There it is there, section 1. A new section will come out and you can write whatever you want to write in it. What I've done is I've arranged these assets in the way I understand them, in the way they correlate, and in how I trade them. It's also how I teach you guys to trade them, all right? So for me, as soon as I open my watch list on a Sunday, risk-sensitive assets is section, the first section, which is EURUSD, GBPUSD, NZDJPY, AUDJPY. I can literally see red. Literally on Friday, all risk-sensitive assets were falling. If this is not a signal, then I don't know what it is. This is a continuation of a downtrend. The first digits here mark the change from the last time price ticked to how price changed in a 24-hour period. So the rate was about, almost $1 or almost €1, and it dropped by that much, or here's the percentage difference. Now, if I look at the safe haven DXY influence, right, this is supposed to be haven, right? And that is these dollar-backed currencies, the currencies that do well when the dollar is strong. Up front, we've got DXY, right, our favorite index, USDJPY, USD CAD, USD Swiss franc, USD China yuan, USDZAR. You can see all these things are strong. They're green because, again, the dollar is going up. All I need to do is to look for sells in these 4 and look for buys in these assets. I mean, I know it sounds that simple, but with supply and demand as a strategy, you are almost guaranteed an easy win if you think like this. Then next, I have my indices, right? Generally speaking, American indices, a little bit of stuff in euro, your UK 100, etc., etc. Just give me 2 seconds to find it for you. Right. So these are the indices there. And you can see our indices just look exactly the same as our risk-sensitive assets. Your NASDAQ down 2%, almost 3%. right? Your S&P 500 down 2%, UK 100 1%, US 30, your Nikkei J225, right? This is simply a much more organized way for me to glance at these charts. The next session that I have is day trading assets. So while I have Euro USD at the beginning, this is my Euro USD day trading chart, the one that's marked with from the 9 a.m. tracking the London session. All of these are uniformly, marked out the same way. When I come trade on Monday, everything is erased. Crypto charts, the ones that I like to day trade, I like to day trade ADA, because I think most ADA holders, most crypto holders who like Cardano, are absolutely ludicrous. This is one of the most emotional community I've ever met. I used to think XRP community was terrible. The Cardano community is terrible. And wherever there are emotions, we know there is bad trading. Where there is bad trading, there is money on the table. And we never leave money on the table, right? You always want to be that better trader, right? And then we've got our currency indexes going down. It's just an idea. It's just something I thought I would share. All right, and these are just basic foreign currency pairs, your gold, your metals, blah, 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 and the bond market. I thought it'd be worth sharing this with you guys. If you want to get organized, it is a perfect way to view the markets, kind of like an overview, but you also have all your charts in one place, which for me is easy. And you can do this on the free trading TradeView account. I already tried it, right? Free TradeView account works. The paid plan obviously would also have that feature. Right, here's your dollar. We spoke about the dollar, right? There was a red zone here. I don't know if you guys remember this. There was a cowboy zone here. I drew the red rectangular, and we spoke about the fact that there's a high chance that this is going to get melted because there is a lower demand. That's rule number one. Price will always seek out a lower demand. Number two is way closer to the supply in relation to the first one. And so that did melt, right? And when CPI data came, number one. Number two, with NFP at the beginning of October, this demand was in good use. And now price has rallied back into the supply, retapping a daily supply inside a weekly supply, inside a monthly supply. And if you really want to see where the dollar is in relation to the heavens, right? Because I think this is crazy, man. This is so parabolic. These parabolic stories always end in tears. One day, I don't know when, we'll track it week by week. But the moment this thing snaps, ladies and gentlemen, the moment this dollar snaps, right, you can tell even on my chart here, let me just see if I can make this as clear as possible for you, that there is definitely a fresh demand somewhere in here, right, on the H4 trend line. The day the dollar snaps at a higher time frame for this area, we need to be long on gold, all right? When the dollar snaps, we will need to be long on gold. This is not a short-term thing, I'm telling you. This is a long-term thing that you need to look out for. Right now, we are guaranteed the dollar is going to maintain its strength. We just got a hot CPI, data type of thing. But I'm saying in the future, sometime next year, if the Fed was to stop hiking rates, say next year, March, we really need to become dollar bulls. But this is where the price of the dollar is in relation to the chart, right? We're now literally about to challenge the 2000 highs. This was during the dot-com boom, the dot-com market crash. It is one of the biggest market crashes that preceded, right, the 2008 financial crisis. And if you look very carefully at what happens at a strong currency during a major crash, and when things need to change, right? So somewhere in here were 17 interest rate hikes, right? Between the year 2004 all the way to March of 2008, the Fed had 17 interest rate hikes just to get the dollar to stabilize as it walked into the 2008 financial crisis, bearing in mind that the presidency at that time in 2008 was the first black president, Barack Obama, who was a Democrat. And Democrats love creating demands. Something to remember, Republicans create supplies, as we've seen here with Donald Trump and historically. 17 interest rate hikes is clearly something that sounds extreme, but something that was necessary at the time. We have just done a couple so far this year, right, since about March. We are almost guaranteed another Fed rate hike in the 2nd of November this month, I'm pretty sure, which will push DXY a little bit into this area come Christmas time. All right. And then we can start to see and hear what the Fed tone is going to be. All right. So this is kind of like just a quick market overview. All right. So quick summary. We're going to get another rate hike in November. I'm calling 75 basis points. If we get 100 basis points, that's going to be interesting and a little bit crazy. All right. The thing that is interesting, and I think I put this out on the public Telegram group, is be very careful about Powell, ladies and gentlemen. This month, November, is a different type of trading month. This month, November, I will need to put out as many videos as quickly as possible on the channel. I have noticed that anytime there are elections, markets do slightly crazy, unorthodox things, and there is extra money that's put on the table, right, that can remove our areas of value in an instant if we're not careful. America is about to have what's known as mid-term elections. Mid-term elections are happening this November, and historically, markets do very bad before mid-term elections, and then markets do okay, or they recover. There is a moment of a big rally after midterm elections. I'm saying this to say Powell's job might be a market job, might be just the FOMC guy, but politics is about to play a heavy hand, right, in the things he's about to decide, right? It's the manipulation, the fundamental manipulation I'm trying to bring up here. And the reason for that is the last CPI report that came out a few days ago is the last financial report we're going to get until these midterm elections are done. And the Democrats are not happy about it because technically speaking, they are the political party in charge of inflation, technically speaking, right? But we know that this inflation problem started a long time ago when Trump was around, when Powell was printing money like a crazy person. But the face of the problem right now are the Democrats. And they are, I'm pretty sure they're going to go out of their way to influence a lot of things. So a very nice chart to keep track on is this one in front of us here, the SP 500 or the SPY, right? This one, the SPY and the volatility index, right? These are absolutely important charts to kind of like keep track on because a lot of things are going to change. Now, the S&P 500, you will notice that on Friday, we actually never got an engulfment. Right, on NASDAQ we did. I showed it to you. You saw it for yourself. But with the S&P 500, we didn't. Number one. Number two, on the NASDAQ we cleared a very crucial demand. It was a monthly demand that had been there for a very long time. We broke it. On the S&P 500, we've simply just arrived at another monthly demand. We are nowhere close to clearing it. Now, I have taught this many times, and I've told you guys, master primary markets. Master the markets that move first and influence all those other markets to follow suit. Because if you can get that right, what you now have is a clean GPS to where price is going. All right, so I hope that's very clear. I expect S&P 500 to catch up with the NASDAQ, but I do expect to see a big fight as we try and clear this monthly/weekly demand. I'm on the weekly time frame. You can see there's a bullish engulfing pattern. You can see there's a value-based rally, and you can also see there's an original 365 candle somewhere there. I would argue that the most order blocks or most buy orders are most likely accumulated all the way down there, which means even though there is still room to the downside, it will not be an easy fight within the S&P 500, right? So anything goes here, all right? Maybe another report will help shake things off and melt things away. But for now, we can simply acknowledge that price has simply just arrived at a governing demand like the NASDAQ that will eventually be torn apart, right? But just be very careful when trading the S&P 500. And the only advice I have for you, since I'm not looking at indices today, is you must get clean areas of value. You cannot rush to anticipate. Understand the difference between market retracements and market reversals. And I did a very good video here. If you come here to the Day Trader series, which is where all eyes, there it is there, right? this beginners to pro guide on Fibonacci trading. Understand the stuff here, you will be golden, right? So you can see S&P 500 came back holistically to clock this supply. Why is the supply? We've got a beautiful imbalance to match it. On Friday, we made contact, right? Clean, just simple, clean. If it wasn't clear on the NASDAQ, it was definitely clear on S&P 500. But now what's clear on the NASDAQ is that this is now a bearish engulfing pattern. And on S&P 500, we just had a red day, right? So S&P 500, the NASDAQ, all those assets are all the way below the 20% mark. So we're back in very bearish territory. All right, please be careful. All right, so let's, with all that in mind, I want us to just focus on the charts that we have today relating to our day trader series. Absolutely important. I want to wrap this up today, but give out signals. By the way, shout out to all of you who donated, who sent us emails. Thank you so much for your donations to a CHD awareness, congenital heart disease. If you follow their pages, or if you follow the cyclotron page on Facebook, you will see your money went to good use. I did match every single donation, and we gave our own lot as well as 365. So we really wish that family all the best. But this is the day trader series I'm talking about. Sit through this stuff, because this is literally an introduction to my module 3 for free. For those of you who think YouTube is enough, I hope you literally master the stuff, because this is easy money. This is literally easy money here. These 7 to 8 videos I've put together here. Today's war room is going to go into this playlist, because I'm going to look at the final piece to the puzzle before I start focusing on registered students. All right, cool. Right, so the first chart we're looking at today is EURJPY. And what I'm going to do with EURJPY, folks, is first of all, I'm going to look at EURJPY from a swing trader perspective, as is the traditional for our war rooms, and then I'm going to drill down and give you guys what I think is going to happen on the intraday time frame, right? So EURJPY has really just been, meeting our basic expectations. Oh, cool. This is still here, right? Kind reminder: I will come. Some of you guys think I'm joking. I'm going to share pictures. We've already done East London. If there are 10 people want to register, I will come. I promise to come. If you're in South Africa and you're the point of contact, or 10 people, you talk to them and you guys register, I will come and sit down with you for a few days just to get you started on this journey correctly. I will come. You'll still get free access to my course, blah, blah, blah. If you're outside South Africa, Botswana, Zimbabwe, etc., Kenya, wherever, if there are 20 registered people who want to come, who will register and are serious about their trading, I will fly there and come. All right. So if that's you, just email me at headtrader, and someone will see the email and respond. headtrader@365tradingacademy.co.za. All right. Let's get the word out. It's incredible. It's absolutely incredible how much money can be made. There is so much money in the market. It's not something that someone can hold for themselves. There is so much, right? Anyways, EURJPY, we know there's been what we've called monetary policy divergence. We know that, the Bank of Japan, right, only now in October has started to give out hints that, look, man, it might be to start to rethink its overall strategy. They haven't really committed to raising their rates at all. And so until that happens, we expect monetary policy divergence. And what that means is we expect that JPY as a currency will stay weak, and anything on the other side of JPY will have a big advantage, right? So you can see, ever since this was announced, and I'm talking ever since COVID, right, 2020 levels, all this chart has done is just rock up. This is just simply from, March of this year, right? It's just been a clean upward movement. And this is, if you see a chart like this, you have to do two things. Number one, you have to say, damn, I wish I knew what to do when price arrived here. That's number one. This is the whole point of back testing. Number one, I wish I knew why Leroy highlighted this area in green as a buy, why he thought to buy there. Number two, you should say it's now October and price is now over there, which means there was no stop loss hits between where price is. This is a daily time frame. I'm not looking at a monthly time frame. I'm not looking at major stop loss areas. I'm talking about a realistic trade that happened this year in March, and this is where price is now. This is the swing. If you can master this stuff and have one or two good trades here, there, and I'm highlighting key areas there, and this one might have been tricky, but not really, because there's the lower order block, right, where the arrow is right there. You would have made a lot of money by now on this chart. This chart would have made more money for you than you have spent losing across different assets throughout the whole year. It's one clean trade idea. There are many charts like this. You're going to see them for yourselves today. We're doing all the JPYs, right? So anyways, we're in an upward pattern, and we want to see where this upward pattern is going to stop or start to lose momentum, etc., etc. Right? This to me is a pivot, a swing pivot point. I don't really consider this an incredible supply. This supply is going to fail. If you're still calling something like this a supply on the chart, on the governing time frame, you need to go back to module 1 and module 2 and master my basics. This is bound to fail. It is bound to fail because it does not meet my imbalance rule. Even if it had an imbalance, let's say you were to find it. Let's say you were to say, but Lero, there's one big candle, then we skip this one, then there's two. You know, it's a very, very, very weak area of value. And you can see the testament to its weakness. Markets arrived, markets tapped, markets are now feeling that weak, right? This area will soon be removed. So this is still not the ultimate target of where EURJPY is going. Those of you who are still holding swing sells, swing buys on EURJPY, we spoke about our target. Our target is all the way here. We will not stop holding until we get here. This is simple. As a swing trader, that's your target. When do I get to buy the car? I don't know. But if you want to get maximum out of this entry, if you don't want to lose your competitive entry points, hold the trade. Let's keep holding this trade. Price is going there, right? So as a swing trader, our direction is clear, swing to position. Right, we're going to find some entries on the daily if possible. If not, then we're going to have to wait for those entries to be created, right? So there's this highlighted area here, and I'm pretty sure I got stopped out, if I remember correctly. It's been a long time since I looked at EURJPY of my latest entry, stopped out there, but there was definitely a clean position somewhere here. If you look at that, clean buy position there. And that's just based on area of competition, right? So we should at least all be holding this one buy, all right? But this one here, very debatable, all right? I know for a fact I got stopped out, right? Now, what we need to do next is to anticipate a retest, right? So there is a chance, very unlikely, please hear me out here, very unlikely, but it's worth marking out. You lose nothing by setting and forgetting. There's a chance that price might return to this point there. That would be a great place to kind of like get a trade triggered. This area here is what we would call a retracement zone, right? And this is why I keep saying, please watch the videos I put out. If you watch this on retracement, this alone, and you really understand what I'm saying here, you realize why you can see from charts without even drawing a Fibonacci why that's a retracement bar, right? You can see there, swing low, swing high. Latest swing is this one, high there. Price came back into this area. Price was starting to sell. Red candles for about a week. And all of a sudden, market stopped as soon as it got past the 0.38 PCP area, very close to that 50% retracements, and markets shot up into the sky. All right, so this retracement zone has happened. Okay, I want you to understand this about retracement zones. Very rarely do we trust the glass effect or the return tendency of the same retracement area. We are very, very, very careful about our retracement zones. We don't want to use them or abuse them that much. So the next time markets pull back on EURJPY, let's see if we can map out a reason for that. I'm trying to see if I can spot out a midterm supply. So for that, I'll have to look on the weekly time frame. There's nothing here on the right of the screen. There's no midterm supply there that's valid. There we go. Beautiful. Found one easily. right? So the next time we get markets to retrace, right, this whole area where price is actually technically about to arrive at or has arrived at. Okay, Fezile, I see your question there, brother. I will literally look at it in a second. I will literally look at your question in a second, and I promise to respond. Thank you so much for the questions. Please feel free to drop any questions in the chat, guys. Let's like the video. Let's like the video. There we go. So this is where markets are. So markets have been hovering at a weekly supply for a while, right? We can see for a fact here, the first time price ever came, the area of competition was thick, and the sell orders themselves were absolutely violent. They even created a bearish engulfing pattern, which of course was broken by the trend, because after all, it's an uptrend, right? In deep into that daily supply, you see where I drew the white line on the left? Markets made it all the way there, and now markets are revisiting. 365 traders, you know my rules. 1, 2, we have a problem. This area here is a no sell zone. I am not selling there. I don't care if there's a weekly supply. There is literally not a safe sell happening there, which means now on the weekly time frame, it will be so great to get a bullish confirmation, because we've already agreed that we want to look for some buys. We want to add to this buy that we have here. And this is the only buy I have in EURJPY, by the way. I wish I was still holding my buy from March. You know, the way you'd swear the way I said it earlier on, it was like I was still in it, right? I wish I still had it, but I definitely have my buy from August, right? Which is somewhere sitting here. Now we have to wait to see what is going to happen. We have two scenarios that are going to play out for the next week or two on this chart. Price will take out the supply and then move like that, right? That's scenario number one. If it does, you're going to have to take a risky trade, and that risky trade should be birthed from your day trading. It's the one of those 1 hour demands is going to hold price through this zone. We're going to go into the 1 hour chart, you know, in a second, right? And then the second option here is for price to actually just completely fall back. So completely retrace somewhere in here and reverse back into into one of these demands that we are hoping for at the bottom. On the weekly time frame, I can confirm that there is no confluence here. There is no weekly demand there, and that the only weekly demand that I see that exists, if I can remove these arrows here because they're just projection points, right? There's something here that wants to rig and perform like a demand somewhere here on the weekly time frame. And you can see on the weekly time frame that area is what has been used to hold the retracement back to the upside. Right, so now if we go back to the daily time frame with that information, you will realize that somewhere in here, price is allowed to drop as low as this area. So I'm going to have a second buy order somewhere in there. It's just red right now for default, right? But that would be, for me, a place where I would literally stake about 5% of a buy order in here, something like that. And then this area here that we marked out earlier on at the beginning of our analysis, I would risk less. I would have a smaller lot size here, right? Because the potential of price shooting through and into this zone does exist. This area here, I'm not even interested, right? This is a retracement zone. It might work, but personally, I am not interested. All right, so I just want to be very, very clear about that. There are currently about 14 people in the live today. Thank you so much for joining me. Please go one step further, and all 14 of you like the video. Let's let YouTube know that this is good information, right? So before I move on, let me just quickly answer this question. Leroy, why is the dollar the only currency that seems to be strong when all other? That's a very good question, man. And I thought I'd do a video on that the other day. Maybe I've already discussed my question. Sorry. No. Let me answer you right now. Every single currency right now is angry at power. Right, so from an economist perspective, I keep telling you guys that Powell is behind when it comes to rates. He is behind, right? They are so screwed. I mean, America is so screwed. And this question, we can take an hour to answer, but I'll take 5 minutes only. But as much as Powell is so behind, every other central bank in the world is 10 years even further behind America right now. All right, and so because of that, because Powell moved first, number one, even though he's behind. AX for Australia, British pound, I don't even want to go there. Euro, Swiss franc, New Zealand dollar, JXY. All these central banks need to start catching up. Now, as much as they want to catch up with the dollar, right? And the only way to catch up is they must also raise rates in their countries. They also have the bigger problem of the fact that the dollar is the global reserve currency. That is to say, it has primitive dominance across many countries around the world. And so because of that, the investors would rather flood money into the dollar. Guys, remember, what do interest rates mean, right? I mean, maybe we must really break this thing at a very simple level here, right? So remember, interest rates can mean different things for different people. If I'm buying a house from a bank and the interest rate is going up, I'm screwed, right? Because my premium is going to be more. If I have a big company loan from a bank and the interest rate is going up, I am screwed, right? Because now my loan is more expensive, right? There's a premium rate on it, right? Because these are terminal rates, right? They're the internal rates. However, if I am an investor, right, and I have $2 billion US, and I'm looking at the price of Bitcoin at 19K, and I follow 365, and they're telling me that there's a high chance that Bitcoin might come all the way down to 12 to 8K. And I've got $2 billion US. My goal as an investor is to make money, right? That's simple. Now, am I going to choose number one, Bitcoin, which still has some way to go down? Am I going to choose something like gold, which has been on a downtrend throughout 2022 during a war, during inflation? Gold has been flopping. And if I listen to 365, these guys are saying might first go to 1.5. But then I listen in the news, as an investor, and I keep hearing that the USD just got 75 basis points again. So if I invested $2 billion into the dollar, right, in March, I was going to get 0.25% on top of my money. And then Powell, the foreign month, put 0.75% on top, which meant I was now going to get 1% interest on top of my money. And Powell kept increasing the rate until the last one in September, where now the interest rate today as we speak is 3.25%, which means as an investor, I want to put my money where it's going to be actively gaining the most amount of money for me right now. Right now, most investors are making money by simply buying the green, because the greenback is making more money for them by doing nothing, making more money for them right now than Bitcoin, than gold, than anything else out there. Interest rates are going up, so if I invest in there, I get more for my money. It might not last forever, but when it stops, then we're going to get a rotation of funds. We see money coming out of safe havens, going to another safe haven or into another asset. So the reason why the dollar right now is the strongest currency than all currencies is because, technically speaking, FOMC is ahead. Even though they are behind, they're ahead of everyone, number one. Number two, it is the global reserve currency, all right? Number three, it's the safe haven flow for funds right now. There is nowhere else money should go except for the dollar. As long as Powell is committed to hiking, I am guaranteed money as an investor. All right, so I hope that quickly, answers that question right there. Okay, so and you let me know if it doesn't, or if you need more clarity, and I'm happy to come back to it. Right, so we've mapped out a couple of buy zones for EURJPY on the swing side of things. Right, now let's quickly look at what that means then for the 1 hour time frame, our day trading series. I'm worried about time because I can see I've already done almost an hour. It's good to be back live, but this was always the thing that used to stress me out on the live. Time, do people like the videos, energy, all those small things, right? So there we go, EURJPY. Right, so now we want to see if we can actually find a clean entry into this week. While we wait for the swings, I want to stress this again. Swing trades cannot be compromised. The swing area of value is exactly what it is. It is the place where we buy and hold our trades on the swing side of things. We cannot compromise it, right? We cannot rush it. We absolutely have to wait for price to get to those areas. The thing that we can manipulate and trade in and out of is our day trades. And for day trades, I introduced scenario analysis earlier on this year, right? Earlier on this year. Fantastic. I'm glad you answered, brother. I'm glad you answered. Hey, Mr. Togozile, good to see you, brother. Good to see you, man. Right. So this is what EURJPY looks like on the 1 hour time frame. Your charts have to look like this all the time. You want to see how this thing is going to open at 9 a.m. during the London session. You want to see how price is going to think through its day, tomorrow being Monday. You want to see whether price is going to create the high of the day or the low of the day. All the things I've taught here on the Day Trader series. You come to our YouTube channel, just click Day Trader series and go through this stuff because I can't repeat it, right? It's just 8 big videos that's so crucial, right? We can see that markets closed off at a consolidation level, all right, on Friday, and we know for a fact that the Asian session is going to start in a couple of hours, and this gap here, the distance between where price is right now and into tomorrow is going to be filled, whether we like it or not. Price is going to come quickly here and start to fill this 9 a.m. area, right? So markets could go up or down. We can see, right, I'm going to switch to 2 hours first, and then we're going to have a look. We know long term, we've been talking about an uptrend, right? This is the last time I traded EURJPY, the last time, right? Clean sell setup when EURUSD was falling, all that kind of simple stuff. Just about almost 3 weeks ago, give or take, right? And I've been waiting for a bottom. I clearly missed it, but there were a few buys. I didn't take this buy, unfortunately, also missed it. But now time will tell, right? The only demands and supplies that you should be looking at right now are the following on EURJPY. On the 1 hour time frame, we've got this massive cluster area here, right? Remember, you have to know your asset. How many assets on average does EURJPY move a day, right? I know you don't know the answer to that, so I'm going to tell it to you because we're doing that scenario analysis right now. EURJPY will move about 80 pips on average a day. Average means looking at the common highest and the common, lowest. The medium is you're looking at about 80 pips per day, right? This is last week, Thursday, where price exploded to the upside. This is about 245 pips, right? That's quite crazy. And then on Friday, at the end of the week, when markets close, markets create a demand right there. You can see that for yourself. And then just close slightly just above 100 pips later, right? So it was a much more cooled down moment. You can also see for yourselves on the charts here, you had a retracement, right? Once you get into the habit of drawing this thing, you can't lose, right? So the retracement was our common PCP area, right? 0.382%, which indicates, is your chart marked for 9? Yes, it is, David. All the red lines are 9 a.m., the London session, all of them, because that's the session I am most active at during day trading, sir. Absolutely. Right, so you can see this is a PCP retracement, 0.38. PCP means potential continuation pattern. That means there is a probability that price might continue. Right, so the trader who is risk averse, who doesn't mind having multiple trades a day, so 2 or 3 trades and 1 or 2 of those trades being hit, so for example, this is 1:1. All right, so what I mean by that is if I was to put a trade here, a buy order here, and price takes me out, and let's say I had $100 and I was trading at 0.01, I would automatically lose 5% here, right? I would lose $5. I would lose it. Boom. And the reason for that is because markets went through my zone. And if I trusted my trading strategy, I would then hope that price would then revive here. I'd hold this buy. This area of value seems slightly bigger than this one. So let's say here, this area here is worth $10. Remember, I've lost 5 there. Basic risk management, basic risk allocation, and I am teaching too much today, which is going to delay us a lot, right? So this is how big this area is. Just to get price back to where it is right there. You see that there? I'd have made almost, okay, let's meet the highs of that week there. Just about there. So I'm trying to meet this high there. I'd have made almost 1:2. What does that mean? It means if I risk $10, 1:2 means I'd have made $20 on the trade. I lost $5, but on the second buy, I made $20, right? That's good R&R, all right? It's just something extremely important you must always think about when you're setting your trade ideas. Now, with day trading, the idea is you are in front of your computer when it's happening, right? As a day trader, that's the whole point of module 3, or why you some of you asked me to create a day trader module for you guys. It doesn't work with set and forget as well as it does with swings, because you have to see the sensitive areas. As a day trader, as a swing trader, I don't care. I don't care because I've already marked out where price is going to go on my day trades. Right, now this is the 2-hour time frame. Don't forget this. I'm going to have to go back now to the 1 hour, because on the 1 hour, I see things much more clearly. See, I've got confluence though on the 2 hour that this is an order block. So I'm going to tighten it up a bit. And you can see for yourself here that the very first order block, which was created, I think, on Friday during the New York session. As soon as the New York session started on Friday, price made a fresh touch on it and went up. So this area has already been tagged, all right? The 2-hour order block that looked like a strong bullish engulfing pattern, when broken down on the 1 hour, doesn't look that strong anymore. It is a nice low demand, but don't forget the rules, right? I don't see the imbalance rule. So already this is a problem. For me, when these things come up like this, then I am forced to make one of two choices. Number one, have one small, very small, tiny, you know, if my stop loss get hits, then it's fine. A pending order right there. That's the first thing I'll do. And ignore this and wait to see this chart after 48 hours. The day trading series, when you look at this chart on the 1 hour time frame, there is always a big move every 48 hours. Every 2 days. I can wait 2 days for the perfect setup. So if this doesn't work, I'm going to chill and wait to see how markets operate. Now, if markets tonight midnight do something like this during the Asian session, and when I wake up at 4 a.m., I meditate, go for my run, skip rope, you know, help my kids get ready for school with my partner, and by 7 a.m., I'm by my desk, right, getting ready for the day. If I start to see price hovering somewhere here at these levels here, just before 9 a.m., then I will be more inclined to let the buy order stand. But if I realize that price rushed all the way down there by 4 a.m., 3 a.m., whatever, I'm just going to allow the stop loss to get hit, because there's a high chance that there's not enough distribution and price is just going to sink a hole through this. Remember, for the most part, we expect euro, right? We expect euro to be weak, okay, for the most part. The difference with this chart is it's euro versus JPY. And JPY right now is the weaker one due to monetary policy easing. Please don't forget that. Right, so the main signal is the swing signal. For those of you day trading, have a look at this and kind of like think through your charts. Now, EURJPY's positive correlation, the chart that moves like EURJPY at a 92% accuracy rate, is Swiss franc JPY. I'll remind you, in my previous war room, I showed you where I get this information from. I'm not some goblet. I don't guess things. I'm not a prophet, whatever. I just come read stuff and research, right? So I click here, EURJPY. That's what I did. This is on my FX book. I'm going to do it once with you on this pair. The rest, you're going to come back and do them yourselves because of time. Now, if you look here, it says top absolute correlation or top positive correlation, right? The next one, apart from this one, because it's not a common thing to trade unless you've got AUDJPY as a broker, right? But for me, I use AUDJPY, of course, but the most popular one to teach on would be EURJPY and Swiss franc JPY. They have a 91.4% positive correlation. That's a big deal, all right? That's a big deal. Remember, though, when trading positive correlations, you double the risk. You double the risks, all right? Why? In fact, most of my floor traders are not allowed to trade positive correlations unless we've spoken about it. And the reason for that is if you're wrong with EURJPY, you might be wrong with Swiss franc JPY. So you might be wrong twice. And of course, if you're right, you are right twice. But why I bring up the correlations is it's important to see how markets are shaped on both charts, because we can get more clarity. For example, we now know there's a 92% correlation between EURJPY, right? But look at EURJPY. Look at it again. We are not sure if the current demand is going to hold, right? We are not yet sure. We're going to have to see, okay? Number one. Number two, when we look to the left, price is consolidating here on the 1 hour time frame. And we're not sure if this consolidation is because markets have hit some type of supply here to the far left. I mean, zooming in is quite pointless, right? All we know is markets are consolidating on the 1 hour, on the 2 hour. We saw a Talitha range, forming. If you zoom into this consolidation carefully, very, very closely, you will realize that there's actually a bearish engulfing pattern on the 1 hour time frame. It may be of no consequence, but it's there. All right, it's there. And markets have already rallied into that area as the close on Friday. The question now is, will price drop, and how far will the drop be? When I move to the 92% twin, basically it means, there are a 92% level of, that's how identical they are, so to speak. I noticed that Swiss franc has also arrived at a supply, a historic supply, not one that it created right now. All right. If I look to the left, I want to see how fresh the supply. It's a very nice fresh supply. It's a bearish engulfing pattern. It's clean. It's clear. I get the sense that Swiss franc JPY is also in an upward, projection. Right. You can see clean demand levels holding. Although there was that weird thing on EURJPY, we've got a weird drop here as well, as low as it came. And then since then, on the 2 hour time frame, we had a bullish engulfing pattern right there. Remember, we drew the first zone on the 2 hour. So I'm going to do the same here. I'm going to draw it here with you. Guys, I'm going to have to move a little bit quicker on the next pairs. Otherwise, we're going to be here all night. I don't mind it, but I worry for you guys sometimes. You'll let me know when you're bored and I can wrap it up. Right, so there it is. So on the 2 hour time frame, I have a demand. On the 2 hour time frame, the supply does not exist. I'll say that again. I'm comparing my charts with this type of positive correlation. There's no 2 hour confluence. The supply is only on the 1 hour, which means it is bound to break. It is bound to break. We can go deeper. The higher you go up on a time frame, the clearer it is. Right. Now we can say, okay, fine, on the H4 time frame, we've got a peak supply on the H4. It's not a bearish engulfing pattern, but nonetheless, it's something. It's something to be respected on the H4 time frame. Number one. Number two, it's an original turn after a serious break of structure to the downside. Right, you can see that right here is the main supply all the way up there, right, all the way up there, right, and price has not yet arrived. And if we know one thing about prices, price might want to tag the highest supply. But now from H4, we don't really have a strong demand. We've got hidden demands, hidden because we're looking at the wicks. Like, see those wicks? When price wicks like that, and you can't make sense of why is it wicking like that, drill down the time frame. There's a hidden demand in price. But on the H4, a respectable area, a stronger demand on the H4 that's been holding price for a while is somewhere there. All right, so now I've got all this information. Look at this long wick, etc., etc. Very disgusting. Could never take a buy on such a chart because, I mean, where do you put your stop loss? And that's an important question. In fact, that's the only question that matters. When you do that to that H4 demand, you can see it starts to disintegrate a little bit, right? Fractality starts to play a role. So maybe we tighten it up like this, right? Then we lose it. We lose the imbalance immediately, right? So it's not a very strong demand. Okay, cool. So this is the only one I can see for now. Bearing in mind what we saw on EURJPY. Then we're down to the 1 hour time frame, folks, and this is what we have. So when I start to tighten all these zones that I had, basically I did a reverse multiple time frame analysis. We've got the bullish engulfing pattern, price set, and then price bought most of those buy orders in there and exploded into the supply. We know this supply is the only supply that exists on the 1 hour time frame. On H2, it's not there, and on H4, it's slightly higher. There's a peak. Then price did this. On EURJPY, we have a simple consolidation On Swiss franc JPY, we've got a bullish engulfing pattern, all right, headbutting a supply, but the supply is this entire peak. So if you're to do the same thing as to narrow down your areas of value on the peak supply, you've got this area here, technically speaking, and you've got a second supply there, which would mean that definitely we can expect this first supply to break. Why? Because markets seek out higher and higher, right? So clearly, Swiss franc JPY is most likely going to move first or a little bit faster than EURJPY. So this is a chart I would look for. If I see that the supply one is broken, that means my buy on EURJPY might hold. I hope that makes sense. All right, I'm just showing you guys, I'm completing this series about these correlations. All right, so this is a better target to think about, but it's going to depend on the Asian session. Will the Asian session want to use such an immediate demand? Probably not. They might want to stretch out down before going up, which means for EURJPY, you also want to kind of like look for a similar play. All right, I'm going to assume that was clear, even though I know I spent way too much time on it. I'm going to assume that was clear, even though I spent a little bit of time on that, right? So there it is there. For EURJPY, I'm going to hold, and wait to see how this area plays off. You can see it's slightly lower, just like how we've drawn that curve on Swiss franc JPY. Now, when it comes to negative correlations, and this is what you really want to look for, you want to have EURJPY and you want to trade EURJPY's negative correlation versus trading EURJPY plus its positive correlation, right? Now, the rule for me is if the negative correlation is not in an 85% to 100, I just don't look for one. So for EURJPY, I actually don't have a negative correlation. The highest you start to get is 66%, and that's not a good probability for me. I want something that is absolutely close to the real thing. Something that will tell me that when EURJPY is going up, yes, Swiss JPY is also going up, but there's a 90% chance that such and such is going down. And I want to buy EURJPY and go look for sell setups in the thing that's going down, because I can't be wrong on both since they both negatively correlate. But if I don't get that, then I just don't look for one. I don't force it. I will not use a 66% probability odds. That's too low. You want something as high as 85% and above. All right, so that's EURJPY, Swiss JPY done. Right, moving forward, you understand what I'm doing. I'm going to have to hurry up, guys, only because of time. All right, Pound JPY is our first asset, so we're going to look at swings. I took a big L again on Pound JPY, and I say again because this was my arch enemy last year. So I finally lost a Pound JPY trade recently, and until today, I still am not entirely sure what on earth I was trying to do. It wasn't something I did on the war rooms, I believe, but there was something wrong. Anyways, oh yeah, there it is. So there was this buy here, right? This definitely kicked me out. But I feel like there was another trade that kicked me out somewhere, right? But look at this. This is crazy. Price literally ripped through all safety buys that were marked out, all safety buys. And this was when the Bank of Japan all of a sudden started talking about, yeah, it's October now. I think I remember mentioning that, look, guys, it's October now, and they're talking about it. So now they started bringing up BOJ, interest rate changes, and all that kind of stuff. There was hell to pay with Pound JPY, and this was literally at the last week of September into October, where the Bank of Japan indicated that perhaps soon they might start increasing their rate, and JPY got some significant strength against us. Pound did its own thing as well. The Queen passing really didn't affect the markets, but there's a lot to talk about the Bank of England. But anyways, our stop losses were hit through and through. I mean, honestly speaking, if anyone is inside a Pound JPY buy trade, good on you if you literally planned to catch this, because for me, this is a terrible area of value. It's already, I'm talking about this last one here. It's already had a multiple test in those areas, so I would have not have thought about it. Buy one made us money, all right? Obviously, we bought up till there. Buy two was when we started to see fire. I lost money there. I tried to buy, I thought this would be low enough. I lost money there. You can see markets first did a clean stop loss hunt and then took off from buy to area, right? So that's been a bit rough, right? So where's price going on pound JPY? And let's quickly figure it out, right? So we've been in this range and we've spoken about this a couple of times that, you know, eventually we might have to go all the way up there, all right? And that's clearly where we're still heading. This is our prime target, this area there, right? In front of us is obviously probably a weekly supply, right? Right, this area, the complicated 365 candle with the beautiful, beautiful, you know, imbalance plus gap and all that kind of stuff when you drill down to daily, okay? And that's where price has been for a while, all right? So markets literally tried to arrive at this area in May this year and then shifted down for months because that, again, was a powerful weekly supply. So we understand that, right? And all of a sudden, with a payment structure where price broke out and then broke back in and then took us out for dinner, literally just wiped us out. To be honest with you, the only safe demand left on this chart is all the way down there, right? That 61.8% bullish engulfing confirmation. This is a monthly retracement area, right? So much selling must happen, so much weakness needs to take place in the pound for that to even be a thing to think about, right? Which I don't think is going to happen. I think markets used up all the buy orders here in the demand that they broke, and markets seemingly, to me, have kind of like created some type of basin like that somewhere there. All right, so I still think pound JPY is heading up. Unfortunately, I don't have any active trades in it. I've gotten properly burnt here, but there's some money to be made if we can just quickly regroup and reprogram our thinking about the chart, right? So a daily area of value that looks very fresh, you know, looks, ready will be this one. All of this stuff I'm going to delete now because we know we lost money there. All right. This, I can't even take it seriously because that is a high risk area. The only thing to be worried about is the psychological level in the chart. And I'm going to talk about how to identify psychological levels in trading psychology, right? This is a psychological chart. You can see this emotional buying with the wick. When we look at wicks, I'll tell you different types of wicks: institutional wicks, retail wicks, emotional wicks from both institutions and retail, right? This is a value-based demand. Absolutely, but it's an emotional value-based demand. We are not entirely sure if the intrinsic value of this demand will match, all right? So that's something to look out for. So we're risking a lot of money here. Once again, you can see it is a clean retracement. Watch this. Drawing the bottom to the top, anti-fib or bullish Fibonacci. There we go. That 0.38% is such a winner of late in the markets, right? These PCP levels, 0.23, 0.38%. That's where market stopped, right? Literally retraced for a couple of days and stopped. We saw the same thing in EURJPY, right? On the swing chart. Remember, all these pairs have JPY in common. They are going to move the same to the trader who's paying attention. So at another retracement area, and remember what I said. I said to that first one, I don't like retracement areas coming back. When price comes back, it can work, but just be, be awake, right? If you look carefully on the Fibonacci, the golden ratio area is this emotional area here. It's a very competitive area, but that's where the golden ratio is, right? And if we use Akini Hashi candlesticks, we can actually see a better candle a wick adjustment, right? We can see a better candle wick adjustments, which is this one like that, and the body of price being something like that, right? Somewhere there. Unfortunately, while I was doing that, I messed up my own Fibonacci. So let me redraw it. Let's readjust the fib levels. Come on, come on, come on. There we go. So swing low to swing high. So this is what our fib levels are saying. And you can see again, our golden ratio is somewhere inside this box here. All right. So be very careful, right? You can't afford to not, or I personally can't afford to miss out on this buy here. So I'll be going once again, just like the earlier swing trade we marked out, going very light on this area until I see if it's holding. and then having my 5% or my better risk allocation risk somewhere down there, right? We do have a good supply right above us, so you really want to make sure you're getting a good risk reward ratio for it to be a good trade, right? And we're looking at about just 1:2. So this buy here is really less exciting for me. This is not the type of outcome I would like. I would prefer 1:3. So it's a dealer's choice. Markets are negotiating between a supply here. This is not a good sign. This supply simply means nothing is happening, right? The way price reacted on Friday already with the rejection candle means that this supply might be taken out as price seeks out to go to the to the higher side, right? So I won't be a seller in this market. I'm going to be waiting to buy at 1 or 2. All right, so that's pound JPY. For pound JPY, we now need to also then look at, I might as well just come here because I know where to find it. I'm going to quickly look at what pound JPY looks like on the London session chart, right? We know that for swings, we're going to wait, but is there any action, quicker action on the 1 hour time frame? Right. So on the 1 hour time frame, you can see we've got one fresh demand all the way down there. We have something here that was used, right? And it was used because it took out a 1 hour supply. But remember, price, after anything on the other side of a trend line, I've told you this many times, will never stop price. Once a new demand takes over, a trend takes over, this will never stop price. And you can see markets just went through it, right? And then what we had instead was a flip zone. All right, so when the supply is flipped over into being a demand, and that's what happened there. Broken supply then became a good place for buy orders. The buy orders put in here were designed to take out the supply so price doesn't stop. Markets then consolidated inside the zone, and that's where they're ranging. I definitely know for a fact I have a buy order on the slower area here. And this one I just don't like. It's too big, it's too wide. I'll have to see what happens in the open. And if we see with our daily area, remember we spoke about a daily entry point, that 1 hour trade that we're looking at is somewhere there. All right, that 1 hour buy zone is somewhere there. And if you draw your buy zone on the daily time frame, I'm just using a proximal line and a distal line. I hope you guys remember what those are, right? If you draw that, you will see how the 1 hour demand is nested right at the competitive area of the daily demand. All right, so it's really something worth keeping and looking into. All right, so please, I hope this is clear. This is where we're buying on the daily, right? That's pretty much where your entry would be for the swing anyways, the 1:2 swing. But what the 1 hour time frame is doing is, the thing that I don't like about that trade idea from a swing perspective, which is it'll give me 1:2. If this 1 hour buy holds, I want you to see the difference. If this 1 hour buy holds and it's the one I turn into a swing, then instead of getting 1:2 by holding a big daily stop loss, I get 1:9, right? That's the whole point of this whole thing. Drilling down multiple time frame analysis, and you know I'll have both trades running, one swing and on the daily, but we have to see how price plays out here. All right, so that's pound JPY. I'm not going to waste too much time. You're going to come here at your own time and figure out which correlation pairs you like. I'm going to tell you the ones that I like just to save time. For pound JPY, there wasn't a correlation pair, unfortunately, a negative correlation pair at the level that I like right now. At the level that I like, that's 85% and above. And the closest positive correlation pair for pound JPY is NZDJPY, and even that one I don't like. And that's because NZDJPY, operates at about a 65% correlation level, all right? And you can see the difference already is starting to happen here. NZDJPY has already arrived at the supply. NZDJPY is moving around, creating more supplies. This is something you must see. This is clean, right? You can't ignore this beautiful stuff. This is just money, man. Every asset, if you grow an intimate relationship with, is good money. By the way, pound JPY on average moves 102 pips per day. right? Remember, I'm going around giving you guys this information. I hope someone is writing this stuff down because you're not going to remember it. Right, so the closest positive correlation we have is NZDJPY, and it's kind of clear to tell that this is going to be a clean drop for a very long time. Clean supply hit. There was never a clear demand and control. Markets broke out of an upward trend line to create a nice base, and one would imagine that we can expect a drop from where price is now, or at the very least up to these levels here, which is about another 100 pips to go. All right, and markets didn't clearly tag the supply up there, so we might get another attempt on Monday or Tuesday, right, which would be awesome, right? If market was just to wick in nicely and then expect a downtrend like that, that would be great, right? We'll see what the markets give us, but this is definitely not something you want to start buying into on the smaller time frames. NZDJPY. And that's the closest correlation we have to pound JPY. These are positive correlations. I don't have a negative correlation that I'm comfortable with when it comes to pound JPY. NZDJPY, since we've already looked at the 1 hour, let's look at the swing. Let's see if we can actually get confirmation that we're in for a swing sell week, because that would help a lot, right? You can see there on the governing time frame. Okay, I closed my sell a while back. That's fine. Let me just remove these notes. But yeah, you can see here, just looking at the governing time frame, we had a new demand set up there. Supply, I apologize. That supply has just been tested. I took the sell. We spoke about it a long time ago, and for whatever reasons, I've closed mine. Right. So there we go. Markets. Then this is within the weekly time frame now. So all this entire area here is the parts that make the governing supply, right? You can see there are equal highs that were banged out there. Market started to drop for about 2 or so weeks. We don't have a clean imbalance on the weekly time frame, right? Nonetheless, markets have slowly started to rise up here, trying to kind of like mitigate some levels. On the daily time frame, we then have our first fresh supply, and I like this supply. All right, markets are selling off here on the 1 hour time frame. Don't forget this, right? But you can see this is my old projection notes where I said I think price is going to come up there. I'm going to leave these arrows there for now. I'll take them out just to show you what's going on. The 1 hour time frame where I said was selling, look at this. The daily time frame is currently involved in some selling right now. There's a bearish engulfing pattern, and price wants to sell out. Now, if this works out, great, because then we can see that sell pressure lasted. But for a swing trade, you probably want to catch this sell here. So this is, to me, this looks like we're about a week or 2 weeks, ahead of time for this to happen. We have to first see how this will play out. Very strong bearish engulfing, clean imbalance, and also a very clean target on site right now. We saw some monthly sell pressure, right, happening. It's not crazy. Now let's draw a bearish Fibonacci from the swing high here to the swing low there. Right, and you can see there with the bearish Fibonacci, our golden ratio is right there. Apologize for the dog, if you can hear my dog. Yeah, right there. See, that's the sell area there. So I would wait for that as a swing trade. But NZDJPY on the daily time frame, on the day traders chart, just see how far you can get, selling this thing for now on the 1 hour, but expect a pivot when price gets to this demand here, this green area there, and price to rise back up to meet that daily supply that we drew. All right, so I hope that's clear. I know I'm moving through charts at different time frames, but I hope I'm coming across as clear as day. If I am, please do like the video. And if I'm not, tell me in the comments, right? It'll be so sad for you to sit here for 2 hours and just leave confused, right? The next chart we spoke about is AUDJPY. AUDJPY, for those who care to know, on average will move 86 pips per day, on average, 86 pips per day. I trade all these things in the London session, but you can imagine this will be better off traded in the Asian session, but I'm not awake for that, right? I really am no longer the young man I used to be. I still wake up early, but I definitely sleep early. Like by 9 a.m., my family knows I'm a ghost. Right, on the governing time frame, AUDJPY, another close trade, sure. but markets arrived at something that felt like a supply, but not really a convincing supply to me, right? There'll be daily, weekly supplies, but the governor is not, this is not a strong sell area. So I do believe that in the future, we will see this area removed. Please bear that in mind. As markets started to rally up in COVID 2020, markets based again at the beginning of this year during the war, and markets have been pushing up ever since. Remember, we've got the same problem here. AUDJPY, monetary policy divergence, a weak yen, and a strong whatever on the other side. So on the weekly time frame, with some type of a reaction, so this short-term buy, mid-term swing buy is closed, lasted about 3 weeks. It was great, whatever. Every time markets give us this counter trend to the downside, we notice that markets break out, another one there, breakout. So this could be just another one of those moments, if you catch my drift, where markets are trending down for about 3 to 4 to 5 weeks, only to break out to the upside. I mean, that's my first assumption here, all right? But markets have arrived at a significant, most likely weekly supply, and that's the difference between these two times. Before that, it was just a drop. Now markets is actually in contact, I believe, with, there we go, a bearish engulfing pattern, a strong weekly supply. And there's also another one here, PCPs with a good imbalance. So there are 2 weekly supplies that price is reacting to, right? And you can see the difference between price here. There was like a couple of green candles on the way down. Here it's just red. It's just been 1, 2, 3, 4, 5 weeks of just bleeding. If I go to the daily time frame, this is what I have on the daily time frame, right? Markets have come back all the way to this demand area where I took a buy. I will not be buying again. I don't think it is a good idea personally. Yeah, I'd rather wait, or rather let price leave without me. Number one. Number two, if I was to buy there, where would price go? All right, let me show you what I mean. I mean this, right? There's a daily supply right there where price reacted to on Friday. So on Thursday, markets tried to leave. On Friday, markets got stuck in a supply. All right, so this is going to control your 1 hour short-term day trades on Monday. This is the, remember when I taught you guys how to trade in module 1, who is in control? Right, and we spoke about control from a governing supply to a governing demand. Then we linked where is price going. And then we do that throughout our multiple time frame analysis. And I'm saying for a day trader, those of you trading on the 1 hour charts, opening and closing trades on the same day, your daily supply and your daily demand is in charge. Right. You have to know that. You have to know the overall direction of price for the next 3 or 4 days. You get that from the daily. And right now, I'm saying price is actively engaged inside a supply. You do not have evidence that the supply will not work until the supply is broken. Until then, you are forced to think, downside momentum might persist. Right, there we go. So markets on the H4 time frame have created a nice bearish engulfing pattern again, almost as a reaction to the daily supply. All right, inside that daily supply within the H4 time frame is yet another fresh area of value, right? A higher supply. So let's say the first supply fails, which is this one, for whatever reason, price still needs to go contend with the higher supply. This is going to affect your day trades. Markets on Friday closed just on top of a bullish engulfing pattern. Right, so again, I would use the whole Asian session, while you're sleeping, when you wake up at 7, 8 a.m. tomorrow, double check where the charts are. How did the Asian session deal with this block of buyers here? Because if the Asian session successfully removes 70% of these buyers, then we know that they are no longer that strong. Then we're waiting for something like this. This will be great, long term. This might even be great too, but more money on the higher sell setup, right? So that's in terms of looking at AUDJPY for swings. Once again, AUDJPY, 86 pips per day for the day trader, and the positive correlative pair for AUDJPY is CADJPY. That is, AUDJPY and CADJPY will move the same, but we'll get to that in a second. I'm just wrapping up the swing trade, right? So once again, for swing trading, we are literally waiting to see this play out. For swing trading, I don't know if this is a good idea to buy here. All right. If you want to buy, really have, a very small lot size. Just if you go 5%, dial it down to 2%, 1%. Yes, we've only had a fresh touch. All right. And I agree with you. And yes, the fresh touch right all the way to the supply. And so this might be a very good buy place later on in life. But just be very careful. Don't go all in, right? As a swing trader, definitely have this supply marked out and then keep a track of this supply, all right, overall direction. Now, AUDJPY, for those of you trading on the 1 hour time frame or day trader series, AUDJPY, you want to look out for, like I say, markets are currently engaged in this daily supply, right? And you really should be holding a couple of cells there. If you are, and this is one of your charts for scenario analysis like me, then I didn't even bother to close on Friday because it's obvious that this is a nice place for price to change its mind, right? So I'll double check, but I'm pretty sure my TP is all the way down here. There's a clean trade, a clean count of the historical trend line inside a daily supply, inside an H4 supply, inside an H1 supply. It was easy money. Right on Friday, CPI, risk-sensitive assets falling. This is a whole, it's a vibe, right? So my anticipations were going to go down a bit more. This is for day traders. So I'm literally just going to continue holding Friday's trade and then see what happens when we get somewhere here. And we'll get here. We'll probably get here by 9 a.m. tomorrow, give or take. And then we'll see from there. I don't think I'll be a buyer here unless I see significant rejection. Why? Because the daily supply is still in charge. And so what I want to do is I want to see push price all the way up into this H1 supply there. Then I sell again. Personally, that's kind of like my perspective on the whole thing. Right. I said the positive correlation to this thing is a CADJPY. Let's really go to the 1 hour and then we'll come back to the swing of CADJPY. Right, so you can see CADJPY, hella bullish, clean buy, really like this. Some of these things you literally can't make up, like very clean interest supply. Take profit was hit on Thursday or Wednesday, I can't really remember. And then I just didn't sell, right? So there's a beautiful, beautiful, unique bearish engulfing pattern here. It looks strong, hey, very strong. But because I don't know why I'm not in it, but I'm not. So unfortunately, I didn't take the trade. But a part of me is like happy that I'm not, because if you notice, markets are just kind of like consolidating under this whole thing. And you saw with AUDJPY, we've got a very clear downward stroke. So there is let's put it an 80% chance that eventually the supply will kick in and start to drop price, right? So CADJPY, I'm out of this market for now, but just look out for that, right? In the short term, we might see a steady decline in price, right? For now, based on the pool of AUDJPY. Remember, this is simply because this trade made sense because of oil, right? Oil had a quick jump. I don't know if you guys saw that, right? And so we've been babysitting crude oil. We're still below $100 per barrel, I believe. But I know Brent oil is kind of like, catching up. So this little amazing quick jump there gave CADJPY a booster. But if oil keeps trending to the downside like that, then we can expect a sell-off in CADJPY as well, which would match AUDJPY, right? The one that's closer to $100 per barrel is Brent. Brent oil is, which is UK oil, right? It's really, really, it's just in the 90s now, something 90s. I mean, I could be wrong. Yeah, $92, right? You can imagine it had the same spike, and then all of a sudden oil started to drop again, right? So I'll be watching these oil charts to see what's going on, but no one can blame the stuff, inflation on the stuff anymore, right? I accidentally logged out in the private 365 group. Can you help me out? Yeah, sure, man, sure. Please send me a private message on Telegram, and I'll do it after today's class. Just send me a private message on Telegram, and I'll send you a link. There are a couple of people who I need to send a link to, actually. It's not my greatest strength. I do forget. I apologize. Right, so that's CADJPY, ladies and gentlemen. Let's go back now and look at CADJPY for swing setups. CADJPY for swing setups. Let's go to this. Let's start from the top. Right. So in my notes here, I can already see we've got problems in paradise, right? So we've got a broken supply. This happened a long time ago, about a month ago. We spoke about it in one of the war rooms. Whenever I'm on the FXCM broker, it's a war room chart that so all these markings I told you, you know, we've been together with them. Now this interesting spike up, which broke this supply in yellow, right? In red, sorry, created a strong demand. So all the buys to break the supply are in this pattern here. All right, so in the last 2 months, basically, you know, someone has been loading this chart up for an upward movement. Right now, we've got this white line, which marks the next bar stop, where price almost hit. All right, and then price fell, and now price is here. And I'm assuming this wick needs to be filled to the upside. I'm talking about this big picture now, long term. Let's drop to weekly. All right, to me, again, you can see I've got my Fibonacci already drawn. I've got my golden retracement area already drawn. And you can see there's a clean all JPY pairs. I hope someone is picking up a sequence, a pattern, right? So for the swing buy, we know I'm already out of it. So I might as well just remove all of this stuff here, right? But for the swing buy, we started somewhere down there, right? Markets retraced and markets are starting to go back up, right? The golden ratio retracement on the weekly time frame and the daily time frame, we've got something similar. Let's just make this green. Have your tools out all the time, because you'll be surprised at how quick price arrives at these areas when you're not even paying attention. Have set and forget place, right? So this demand here, right? I'm not even in the second trade, but look at this. This is something we should have gotten into together on Monday. This past Monday, had we all been focused on CADJPY, would be on day 3, 4, 5 of this swing, right? I'm not even in it. Right? I marked it out clearly weeks ahead of time, and then I just didn't set and forget, right? So see, even me there, I messed up big time, left money on the table, right? So we're gonna see how price negotiates with this area here. This would have originally have been a take profit place for this TP1 and TP2. TP3, as usual, please don't forget, you break even and you just hold. If your perspective is there's still more room for the upside. I wouldn't sell there for now, because we're literally in the middle of a retracement. And I'm saying this to say, because we broke a supply, we are creating higher highs. We are not making lower lows, we're making higher lows. So this supply is really cute. It's just a cute speed bump in the way for price, right? But remember, what we need, what price is waiting for is to get oil. If oil can come to the party, right, and have another spike during the week or whatever, you know, OPEC, whatever is going on in the world, I'm clueless right now, then the supply will be removed, all right? Now, with the demand, unfortunately, it's a high risk taking another buy in this area, right? So you're better off taking a buy inside this wick here, and for that, you're going to have to look for H4. This is a swing. Talking about swing, you see there? H4, right? You might get lucky here. Might, right? But I'm telling you now, on the daily buy, you know, forget this area of value is already overcharged, right? And so we hope that this area will protect a price, and then if it does, then you really want to hold up until the next peak, which is here. Your next take profit zone will be somewhere here, right? Don't hold past that point. Only because you will give away your profits. And this is not a good trade. This is not a sexy trade at all. This is not a trade that you can write songs about, right? Because your risk to reward ratio has been limited, right? It's literally less than 1:2. So I'm telling you right now, I'm not taking this trade. It might work out for you, but there's no point in me taking this trade. But if you want it, you know, I know profitable traders who go for 1:5. 1:2 risk to reward ratio. 1:3 is just a 365 thing that I prefer for myself and for my floor traders, the people who trade my money. But yeah, 1:5 is fine for some people, but just know that the margin of error is thinner. And if you make enough mistakes with 1:5, you can blow your account. right? 1:3 is there to create that buffer. On your good days, you have a big buffer, so that on your bad days, you still have an account to trade, right? So for me, for a swing trade, CADJPY is a no-go for now. But that demand could hold. Right, next one is Euro Pound. And Euro Pound, you know, is not the greatest mover during the day. It's a 40 pip on average mover, 40 pips, Euro Pound. And, you know, it's just nice to know that kind of stuff, I guess. On the swing side perspective, right, we were still deep. I mean, if I remember correctly, I think I was on $5. You know, I barely made any money on this trade right now, on this buy. Barely made any money. And I think if I am to get anything positive on the swing, by the way, Monday, Tuesday, I'm gonna just break even, right? Something tells me that this is not gonna be a nice trade to hold, right? Look, pound is in so much trouble, and that's literally content. A whole video of that will happen during the week. I promise you, if you guys can get this video 20 likes, I'll drop an education video during the week on just the pound and what I think is about to happen to the pound for the next 5 years, and why it is a good idea to get into the specific side of the markets. And I'm going to show you where and how. I'm going to show you what the Bank of England is planning. And I know this because I just did a presentation on it for a company that's going to invest in the upside or the downside of the pound or of UK 100. Just 20 likes. Please like this video, and I promise to drop this video for you this week, right? You can even see how I am in my workshops if you want. Now, this is the pound, and the pound has significantly hit an interesting area. So let's go to the monthly time frame, right? The pound was always due to fall, and the pound is notorious for this. I've been wanting the pound here, you know, long before I've been wanting Bitcoin to come down to 10K, all right? And what happens is the pound blew this demand and then created a nest, blew a supply, and then blew this demand here, went down, and now it's trying to take out a supply. And every time the pound does that, some damn politician is elected. This is Boris Johnson's decline, right? I remember trading this on the road a couple of years ago. Boris Johnson is out. Queen died, and then some new prime minister is in, and she or he or whatever, I've forgotten whether it's he or she, I'll tell you though, they've got weird plans. They're acting as if inflation isn't real, these people, right? So we are definitely going to see the lost decade within the Bank of England far much more quicker than any country in the world. I'm talking about first world countries. In fact, if you're in Africa, by the time the markets are down with the Bank of England and the pound, you are going to wonder how these people even managed to colonize us. Bet on this stuff. I promise to drop a 30-minute video explaining this stuff if you guys get me 20 likes on this video. Right, but as you can see, the pound is just fighting for life. Every time it breaks a demand, it creates a new one. Right? It creates a safety net. So we've got this weird demand that happened here, right, somewhere there, and it was just right too close to a supply. You can see that the supply was like excessively tagged, right? You can see, look at how long this week is, really doing its best to try and take out the supply, right? It's excessive tagging. And now, you know, I guess the hope is that the euro will gain strength and fill this gap, right? Remember, this is euro pound, so we're looking at euro strength relative to the pound here. All right, so on the monthly time frame, this is what it looks like. On the weekly time frame, we're looking at a very weird, what's it called? Upside down hammer, shooting star, whatever those price action stuff are, right? And then we've got a bearish engulfing pattern to continue, and then we've got this distance here, right? We've got this distance here. That's why I'm saying, damn, man, this day, the daily demands here, and this trades that I took, one that I'm in this buy, I am interested in getting out as quickly as possible, right? As soon as I'm green lit, I'll break even. I can break even buy one here, sure, but buy two, I think I literally was on $2, $3 profit. Nothing crazy at all. But it's just to say, look, man, if markets recognizes a valid supply, which it is, but markets also want to continue pushing down. So continue this trend of lower highs all the way down, then I'm in trouble, right? I'm in trouble. And if you took this trade with me, then we are in trouble together. So as soon as you can, please break even on buy one. I'll do that tonight when markets open or tomorrow morning when I wake up. And then I'm just going to wait for buy two. If buy two can just kind of like get some breathing room to the upside a little bit, that would be great. And then I can, also break even. But I have no intention of holding on to these buy trades. I suspect they are in trouble, right? So we shall see how long this lasts. But that's all I can tell you right now on Euro Pound in terms of swings. Euro Pound in terms of day trading, as usual, is sometimes always just a whole completely other different story, right? Right, we've got this opening here. Okay, and you can see markets are trading down, trading down. The lines you're looking at are my supply and demand curve lines. I don't know if you guys remember doing that stuff, but you can see very clean touches on each curve, supply. And I honestly wouldn't be surprised if markets were to drop all the way down there. And so that's what you want to look for in your 1 hour time frame. Just excuse me for 2 seconds. Do I not have a 1 hour chart marked up for this? I do. Oh, it is this one. All right, fine. Sorry about that. I mean, maybe I've betrayed on my phone. I don't know. Right, so there should be 1 hour lines here. I'll put them in when I get the chance, right? But for now, this is something to really look for, right? So let's go back to daily. Let's do a quickly MTA because I lost my train of thought there. Right, so got 2 daily supplies tag. We've got a new bearish engulfing pattern. And right now, this is where our buys are on the swing charts, right? And I'm saying, look, there's a high chance that this thing's going to go down. All right. And that's kind of like, to be honest with you, for a day trader, you really want to be looking at something like that on this charts because, that's kind of like for now the clearer play short term. But long term, I think Europe is stronger than the pound, right? But when that time comes, we will talk about it and the markets will pivot, right? So this is it. Markets are breaking structure to the downside. And so we expect every single rally we see on the charts, we expect price to sell it. Every single rally we see on the charts, we expect price to sell it. So look out for something like that. Draw a bearish Fibonacci on the 1 hour time frame. It will help you, right? There we go. That's a golden ratio, 50% area. All right. So all we need to do is the Asian session to tap us in. We don't have great distribution. All right. This is feeling like an arrow. Remember, when markets come very parabolic, they do break our areas of value, right? So that's H4. That's what it looks like on H2. On H2, we've got much better distribution on H2. Much better distribution. Makes me want to make this yellow on H2. But we've also got a buyer's order block right there. All right, it's fine. Let's adjust. Okay, fine. We'll leave it. Got PCP there, and then markets coming there. Right. So on H2, we've got something like this. This is really our prime target. You really want to watch the stuff play out closer and closer to the time. See how markets open at 9 a.m. You will know from Euro USD if markets are going to create a high of the day or the low of the day. A high of the day means strength in Euro. Low of the day means weakness. And then we trade accordingly, right? So this is the whole 2 hour zone. But on the 1 hour time frame, you really want your peak. Markets are not shy to reach for the highs, right? So don't be as well. Right, so you can see here, if you draw the complicated candlesticks plus the wick, right, you can see that markets made it all the way up there, right? And you can see that there's good distribution here. And by distribution, I mean markets are trading, they're distributing evenly, buying and selling at a better rate than this parabolic sharp fall. And so when markets come somewhere in here, and there, I expect some type of sell-off, right? So if I had my 1 hour lines drawn, I'll be able to tell, right? But this chart is not the most impressive mover during the day sometimes. So just bear that in mind, okay? And the positive correlation for Euro Pound is USDJPY. That's a 90% correlation. So let's look at USDJPY. Maybe we can make sense out of it. Thank you so much for all you soldiers who've been with me for almost 2 hours now. You can look at that, very parabolic, very strong, rocking on, right? So USDJPY couldn't be bothered by a K in the world. And this is technically speaking because of the dollar, right? This is what the dollar looks like right now, right? DXY looks like this, supplies disrespected, disregarded, H4 time frame, same situation, right? Literally nothing, no, not a single K in the world throughout September into October, etc., right? And then daily, right? This is what it looks like on daily, right? So we do have, you know, a big divergency here. Obviously, strong hikes on the dollar, zero hikes on JPY. So USDJPY on the swing charts, which is a better indication, will tell us what's up. Right, so our last buy place to hold was there, but look, they took the buy inside the supply and then broke it, right? And you know, I don't advise you to do this because, man, it's risky. I didn't know it was going to work, but I can't sit here and tell you on the day buy, right? I told you to wait outside. I waited outside, but there we go. There were enough buy orders to take out a supply, right? So now that the supply is gone on the daily time frame, right, you know, we can expect a retracement, sure, which would be great. A retracement to this area here. That's the next place you should wait for, right? That's what you can expect from the dollar. And that drop could happen up there like that. So first it goes up a bit more and then comes back down and into there. But for the most part, that supply is gone. And just to make it more relative, look at where price is going here on the monthly. Sorry about that. Look at where price is going on the monthly. On the monthly, we've taken out this monthly supply, which was always on the way. And now we've got a bigger target at play. Markets now have a bigger target at play, right? So price is now coming up here. By the end of the year, this is where price will be. Just like the DXY, there is a big governing demand here, right? Just like the DXY that I showed you guys at the beginning of this war, right? So if you can catch these demands, this will be great, right? But in the short term, on the daily time frame, this is all you care about. So I'm going to remove this now. I'm going to remove the supply. It's useless. It's gone. There is no selling pressure there anymore. So we can see what on earth is going on. And I'm saying to you, I like the distribution. I like the imbalance, right? Take a risk here. Perfect. Right. We shall see. We shall see. Right now, we can't even draw a fib because there is no swing high, right? But if we just look at this level here, you can see that's where the golden ratio is. So we're going to wait to see where markets will decide to stop, right? We'll see where markets decide to stop to give us a swing high, swing low, and then we'll decide from the last swing low, right, which was this big red candle, to where markets are right now, right, which is not a valid swing high, okay? But from the last swing low to where market is right now, this order block is perfectly nested in a golden ratio of 50% area. So it's definitely worth taking the risk, right? Unfortunately, this one I missed out on. I didn't even bother. And that's because we were waiting to see, if you guys remember me on USDJPY, we were waiting to see if price was going to break this trend line, which it did, right? And then I said, well, I'll wait to see a full drop. And then obviously NFP came out strong and CPI came out hot. So yeah, there was no time for the dollar to even catch a break, right? Like I said, investors are pumping money into the dollar. It is a good return of investment. Like the only business right now that's making money for the banks is lending, right? Literally lending, right? People, they're getting their money back at higher returns. Okay, so this is gonna rock. So look out for this because guys, the target, then if you get in, and you want to say thank you, Leroy James, my series, for the last 83 war rooms where you gave us 85%. Actually, I lied, 88%. According to my trading journal, I'm on an 80% win rate this year. It's insane. 91% if you include indices. It's insane, right? But this is it. Just hold the trade. Come on, man. That's 1:9. This is easy money. Hold the trade. If this fails, cool, kumbaya, move on, wait for another demand and hold the trade. But the path here is very clear. All right, so that's USDJPY, which is a 90% correlation with Euro Pound. That's why I told you with Euro Pound, I don't like how the monthly spiked through that monthly time frame on Euro Pound. And look at its twin, 90% correlation to the upside, right? So be careful about that. The negative correlation to euro pound is pound Swiss franc. Pound Swiss franc. So that is to say, when pound Swiss franc is going down, euro pound sometimes will most likely be going up, right? So there we go. This thing just tore through something and now it's retracing back up. Let's have a look. Let's have a look. Don't tell me this thing there's no bottom now. There. But that we've taken out the 2016 major turning point. If you've done my course before, you know about major turning points. We have literally, there's no major turning point. We have taken it out. We have no bottom. We are free flowing. And please note, remember I said 20 likes on this video and I will give you the craziest information on the pound. I'm probably going to give it to you anyways. I'm not going to, there's no point in me holding it, but I'd appreciate you guys liking this video. But pound is in trouble. Go through all the pound assets. And I promise you, you will ask yourself how on earth these people colonized Africa. Their thinking is still the same, still archaic. Right? These guys have decided you should if I tell you what they did with pension funds during the last decade, not even South Africa. South Africa is one of the most ridiculous countries in the world in terms of government, right? Policies, but they are at least holding their PAC governmental pension funds in the hands of asset managers like myself. So they give them to licensed financial institutions called the PICs, the public investment. It's a whole big thing. But my point is, in the UK, these guys gambled with everyone's pension funds on leverage. And the Bank of England now is scrambling to fix it. I'll tell you the story this week. I promise to drop a video on the pound, but please definitely drop a like. But it's going to help you understand why the dollar is slightly ahead. You know, to answer Davis, like really need to understand how the central banks are seeing things, right? But we know the rules, guys. We have no major turning points here. So we are up and down for a downside. We might not even get a strong enough rally, by the way, to make it into a supply. But if we do, positional trade. If we get a rally on a governing time frame here, hold the sale until it buys you a house. Hold the sale. Right, please note, just start to think long term. On the weekly time frame, this is why I'm saying you might not even make it up there. Right, in the weekly time frame, we've got better supplies that are ready. Right, so what we do now is we anchor ourselves, swing high, swing low. We put our Fibonacci on the highest point, and it's a downward Fibonacci that I'm drawing, not an upward one. Right, and look at that golden ratio, shotguns ready. Right, so some action here. On the weekly time frame, we've got confirmation that this is a high stress sell zone. Yes, we don't like the distribution on the weekly. It's a little bit sharp, but let's have a look on the daily. Right, on the daily already, beautiful distribution, prices starting to fall, psyching out retail traders. Leroy, how do you know this? How do you not know this? Right, I did on the day trader series. What did I do? I showed you guys a change of character, sure. Then I showed you guys how to read liquidity, how to read basic liquidity. You have to go back to these videos. This information doesn't stick in your head naturally. You have to revisit it over and over again. Right, so when I'm just looking at this chart, even on a daily time frame, just like this, I can automatically see a liquidity schematic. And I want to, let me remove the Fibonacci. Right, the Fibonacci is gone. And I want you to remember how schematics work. Schematics are there for you to remember or think along the same ways retail traders are going to think. So I'm going to draw a high point there. What's this high point? It was the high before price went down. Markets have been breaking lows, going lower and lower, and all of a sudden, what do we have here? We've got a slight change of character. When the change of character came through, markets sought out some demands. You can see there, change of character meant we're changing downward momentum to the upside for now, and markets did that. When markets did that, swing high, swing low. This is now for short-term trading. I'm a bull now, or short-term, because there was a change of character. And you can see short-term on the H4 time frame, my golden ratio is literally located by an order block. Is that a coincidence? It's not. It never is. It never is. All right. So I take all that out there and then I go green. This is short term. Long term, I told you what to do. Hold your cells. Short term, you decide, right? So if markets break this liquidity area where there was significant market memory, for example, someone's going to call support here and try and buy there, right? We anticipate they're going to get Brent and markets are going to come to an order block and then buy from there and then recover all the money they're using to push price down up until we get to this supply. That's the next move. Short to medium term, we're going to wait for a drop into the H4 order block. We're going to go buy up. Long term, when price gets up here, we are selling. That's pound Swiss franc. Keep checking this chart for the next 2 to 3 days. Every 3 days, come check here and see if I'm wrong. If I'm right, join us so I don't have to do this work for you all the time. Especially when I start live classes, I do get, little energy. I get zoned out. I give my all in my live classes. So obviously I might not be up to date with war rooms when we start on the 1st of November. Right, so that was USDJPY and pound Swiss franc, looking at euro pound. The last charts for the night, folks, is gold. I mean, I've spoken about gold from a swing perspective. I don't remember lying to you, not even once. Not even once. I told you. And I know I'm right because I'm still holding, and it's not just one trade, right? Please, I hope we are still here. Like gold, guys, we've got this beautiful trade moving down. Then we had a retracement. And I said in the public Telegram group, watch the retracement video. Don't have fear. If you look at gold from the first swing high, trend line touch, to the next swing low over here, if I was to just draw a Fibonacci from there to there, I'm just going to switch it out. You see this? You see what just happened? Right. And then markets came into this area here, this order block area between 50% and 0.618. Right. And so what I did and what I told you I was going to do in the group was I am a seller in gold until I come back and change my mind. I'm about to change my mind on gold, and I'm about to, could be 2 weeks, 3 weeks from now. Right now, I'm still a seller. But I told you that this one sell that we're holding, it's fine. Hold it. I drew proximal buy lines for it. I say it's going to turn here on the H4 distal demand distal line, and there it is. It literally turned in the middle of those areas. I knew where the buyers were going to be. I could have bought up with them. I just didn't, right? But as a trader, if you understand my module 1, module 4, you can eat both sides of the plate. I just don't do that because I get busy with admin stuff on the trading floor. But if you're a full-time trader and you don't have to manage other traders, you could have bought here. The bigger point was we knew the retracement was going to end there. Why? With valid order blocks, that's number one. That's all you need, supply and demand. But more importantly, it was where buyers were going to lose steam and sellers were going to come back strong, because that is a good discount. If I was buying something and it lost 61.8%, and as a seller, I waited for the price to go up before I sold it again and gained 61.8%. Look at this, no stop loss hit, proper, beautiful distribution inside the zone, and markets have been falling ever since, right? Then we had CPI and all these things that helped, right? So markets are still falling on gold. On gold, guys, I have nothing to say. I honestly don't know what more you want me to say. There is zero. Let's go to the daily time frame, and then we can have a clean look, right? All my order blocks on the daily, clean. I mapped this out for you in the war rooms. You know what's funny? YouTube sent me an email the other day. YouTube said, congratulations, Leroy, for posting 200 videos. That's crazy. Because if I really think about it, 83 of those videos are war rooms. What are war rooms? War rooms are free money. 83 of free money. Then there's this little series I've done here, which is 8 videos. So let's say we're on 91 videos. And inside 91 videos, there's the Traders Rehab, right? In the Traders Rehab, these were basic just market ideas. What did Powell say? Fundamentals, CPI. There's about 25 videos. So now I've got 125 videos. I know for a fact where I am just giving game, straight game on YouTube. 200 videos in. That is incredible. Anyways, please do subscribe and like, right? Because I've been working. Right now, let's quickly do a quick schematic read. We've got a breakup structure on gold. We've got a tagged supply, which we should be in. A second tag supply here, tagging this supply. which you should be in, and then the last retracement that I told you to take. That's 3 swing entries on gold. That's literally how you build an account. You don't close in panic. You check if it's a retracement or a reversal. If you don't know the difference, stop trading. Go back to the course. Stop trading. I promise you, you will make more money in your life if you go back and learn than lose so much money being stubborn because markets are moving. Markets will always come back for you. Right, so now we want to see how strong these areas are. The H4 proximal line that I drew about 2 weeks ago for you in these war rooms has been tagged once. Right now we want a bigger tag, want a stronger tag, and we really hope that sell orders on Wednesday we put in here when CPI kicked in Thursday, Friday, and we want to see. So if markets were to say by Wednesday, create a lower low, this would make me very happy. Very, very happy. The reason why I'm saying this is because I might be forced to close my swing sells on gold soon. All right. By soon, I mean within the next month or two, because markets are slowly starting to pile up. Starting to pile up some buy orders, right? We might still have this area here, right? I told you guys end of 2022, early 2023. This is where we could expect gold to come. And you can see my red arrows are holding. On the weekly time frame, we now have a new bearish engulfing pattern, right? So keep the faith, let's hold. But we really want to see this broken on the weekly time frame. If this is broken, then yeah, well, it's clear, clean and cut. If markets start to breach and close above this area here, then you definitely will want to take profits because markets are now almost changing their tone shortly, right? But I anticipate stronger dollar up until November the 2nd, right? That's the date to remember. After 2nd of November and FOMC comes, what will happen in the markets for 2 weeks of the unknown is the impact of mid-term elections. I can't make a call about that right now. I can do it closer to the time. I'm going to look at COT levels. I'm going to look at their order flows, and I'm going to come back to you. But right now, we've got a clear trading plan until the 2nd of November. FOMC drops a new rate hike, and then it's midterm, right? We don't know what Biden would say, how he's going to lie, how the elections will pan out, but that's going to definitely affect the markets, right? So this is gold, guys. Gold is simple. With gold for day trading, I always day trade in line with the swings. You never buy gold on 1 hour if daily is falling like other assets if you want. That's too risky for gold. I only sell on the 1 hour supply that is nested in the H4 daily supply. So we won't even waste time there. Now, gold has a 92%, actually 93% correlation with silver, which makes a lot of sense, right? Which makes a lot of sense. So if gold is going down, we expect silver to be going down. Like there's just no rocket science there. And there you go. Silver, same area of value that I gave you guys that I said silver's going to come back down to. Should have taken profits there. Markets came back, really take profits on Monday. Take profits again now, because I don't know if this demand will hold or if price will crack. But silver is a very, very good indicator, or rather gold is a primary market of silver. So wherever gold goes, silver will follow, right? But this has been a very easy thing to trade, silver. Now, the opposite of gold and silver, the negative correlative chart of gold and silver is USDZAR for me. And that's an 88% correlation. USDZAR pretty much does slightly the opposite. Let's go to the swing chart. I unfortunately this whole year have refused. I did it once and I lost money and I told myself never again. I have not, apart from the one time, sold USDZAR at a supply. When USDZAR is at a supply, I just leave it alone. All right. Why? The dollar is just too strong. I mean, yesterday on the news, I'm pretty sure it's been the truth for about a week or two. The Zambian kwacha is actually stronger than the rand, believe it or not, right? And that's because it's exotic markets, these emerging economies, as we like to call them, are really like struggling under the grip of the dollar. And you can see for yourself, USDZAR is at a beautiful, healthy uptrend. No reason for anyone to think it's going to stop anytime soon. right? And if you just look at, let's go from a governing perspective so we can see where we are, right? On a governing perspective, what USDZAR did was, and it was beautiful, well, perfectly timed, right? Literally at the emerging of COVID, right? We had a new major turning point, and then we sold. And when we sold, I remember we thought we were going to come to this demand. We didn't. We even went lower. That's fine. And now we are back all the way up there. And what happens with USDZAR is every time USDZAR matches its major turning point supply, there's always a 9 out of 10 chance of USDZAR creating a higher point. Why? Because according to our module 1 lecture, the first lectures in the course, we know USDZAR is a buy profile asset, right? So it's going to do what it does, right? Literally like feeding off the dollar. So when it's at a supply, I have no trades to give you. I do nothing. I don't care. I do not trust a single supply on this chart until it's a governing supply. And for a new governing supply to come about, this one needs to be taken out so that a new major turning point can be created. So until then, you know, it's going to be very high risk buys within this yellow zone if you want to trade this thing. For example, on Friday with a new bullish engulfing pattern. If you're a risk taker, you can buy more, right? But it's no longer worth it. There's nothing here. For me, the risk reward ratio is off. I'm going to come back to this chart maybe 4 weeks from now, right? We'll see where it goes. But for now, this is a steady bullish asset. All right, USDZAR. And the last asset, absolute last asset linked to gold is palladium. Funny story about this asset, but this asset once bought me a car, palladium. Palladium once did so well for me, I got a car. Why can't I find my usual charts? What's going on? Palladium pays very, very well. I guess it depends on your broker, but on AvaTrade, Palladium pays very, very well. Palladium is also, for the most part, predictable if you understand or you know how to read gold. Okay, so if gold is falling, palladium is falling. You can see this is a supply area. Markets kind of went up above it, broken supplies at the bottom there, but for the most part, palladium wants to come down with gold, right? So we'll be watching this chart quite carefully. Okay. Right. Yeah, there's not much, man. There's really not much going on here. Because if you're not in it like me right now, there's not much to struggle for. We're going to have to see if this demands hold. I wouldn't be in a rush to buy palladium right now until gold settles down, right? But you know, if we're being honest, then one could look for a bottom retracement all the way down there. It would be very difficult, but this very much could happen, right? So if I was to start to look for buys in palladium, maybe it'll be somewhere down there. Maybe it'll be somewhere down there. Yeah, and this is an old, this is the COVID area, right? You know, the destruction of COVID. On the weekly time frame, we've got a new governing supply. Sorry, a weekly supply. On the weekly time frame, we've got a mayoral supply there. And that's much more, something that's more appealing to me. Someone who's holding sells on gold, this is more appealing. So if I go back to daily now, damn, I missed it. Should have jumped on that sell. Yeah, missed it. How unfortunate, right? So we've got a clean breakout structure here. And honestly speaking, the only thing that's going to offer us some type of entry is maybe an H4 chart. I'm going to go Akini Hashi just to get clarity on the candlesticks. Honestly, still not clear for me. I'm on the 2 hour. Back to normal candlesticks. Okay, I see one somewhere up there. Let's just mark it for now. We'll come back to it. This here for me feels it was mitigated by that. That here feels it was mitigated by that, and up there is too high, right? So I've just got the one area there. Now we don't have a swing low, so we don't have a swing low like this that would allow us, sorry, to draw a downward Fibonacci. But let's just see from up here all the way to where price is right now. That's a PCP area, this area here. And if markets were to continue to drop all the way to the green zone before retracing all the way up there, this would put us just in between a PCP and 50% retracement. Right. So the honest truth is, it's a risky play. My instincts are, let's just wait a little bit for Palladium to settle. Like, we missed it. Let's come back after a week, after ticks, and see where it is. But those of you who have scratchy fingers, like me sometimes, even I have scratchy fingers, then, risk very little or risk appropriately somewhere there and see what happens. If you get lucky, that would be a good break. You can see this is very, very parabolic to the downside. Markets are just crashing nonstop. All minerals should go down anyways for now, as long as the dollar is in charge, right? And Palladium, I see there, I was looking for earlier on XPT, and XPT is actually platinum. So another interesting mineral to look at as well. I know for a fact I'm not in any platinum trades anymore. So what's going on here? Either I closed early, but I know there's nothing on my live account that's still holding platinum. So I just want to see when and how I got in or out. Yeah, okay, fine. This was a sell. All right, I got in this sell a long time ago. I got out there. I was never part of the retracements, and I'm not in this current drop there, right? So I can remove all of this stuff. I wish I still was in it, but unfortunately I'm not, right? So anyways, there's a supply we spoke about. Markets came, I thought markets were going to go all the way there. When the rejections came, obviously I had to close. But now, platinum is trying to, veer off a little bit higher. I'm pretty sure this won't last for long, only because gold in general is weak, right? So this shouldn't last for long. But if it does break out, then I'm very interested in platinum, because platinum has a bright future. But yeah, the first target will be there for me. If this supply fails, then I will come back one day into the future, right? And then look for demands and then hold along like that. But for now, I'm going to respect the downtrend and do nothing, right? Because price could just get up here like this and then continue to fall like that, right? So that's a big possibility. Folks, thank you so much for your time, man. It was nice doing stuff live. Let me know if you prefer the live or the pre-recordings. It's always based on my time. Remember, I am traveling around doing workshops for corporates. So if I'm away that weekend, then sometimes I have to do a recording. It just depends where I am. But I thoroughly appreciate every single one of you that stuck around. Please don't forget to like the video and subscribe. Obviously, all the best with your trading this week. There's a lot of money on the table. There's a lot of weird things happening in the markets, man, that we just need to all keep ourselves apprised to, right? I appreciate all of you. Shake my hand. I don't even think I asked for a handshake at the beginning, but I appreciate you guys. Please, if you're not a registered student, shake my hand. You will never get this opportunity to sit in a 365 live class on trading psychology. There's only one live class. This is the stuff you will see. This is the stuff corporates are calling me for. By the way, my corporate hour is $850 US per hour, and these workshops start at 8 a.m. till 5 p.m. for about a week. All right, so you guys are getting the stuff at $100 US for lifetime access in trading psychology. And this is not for students who are already registered. I'm just talking to anyone else who wants to register now. This is the best time to jump right in, right? But I'll catch you guys during the week. I know for a fact I am home this week. I'm not booked anyway, so just keep your eye on the channel. I'll be dropping a couple of different things just to help you with your trading. Love and appreciate you all. Thank you, Mom Eunice. Thank you, everyone, and have a good night. I'm out. Peace.